Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. And on the technicals now, we're joined by Sneha Seth, who's a Senior Analyst, Technicals and Derivatives, Angel One. And of course, we're joined by Gaurav yet again. So let's get started with all the stocks that are in focus today. Sneha, you've picked out ABFRL for us. The stock has given some good returns, over 50% returns in the last 6 months. Tell us, is there more steam left? Is there more upside to this? Though in the last 1 month, we do see it, consolidating a bit of a consolidation. So what is the upside that you see for this one?
If you look at the chart structure, we have seen a very strong run from 300 levels to we can say 340, 40 plus. But now recently, in last couple of weeks, we have seen some consolidation, some profit taking from the higher levels. But if you look at the chart structure, recently in last 3-4 days, we are seeing this counter recovering precisely from the 89 EMA on the daily chart, which is a very good indication. At present, I believe any move beyond 325, 326 would be, bringing back the momentum, and we may see this counter again heading towards 350 and plus odd zone. So if someone wants to go ahead and long for a very short-term trade, one can go long with a strict stop loss of around, say, 314, and the target expected will be around 350.
Okay, so that's a long call coming in on ABFRL from Sneha, but let's talk about a gainer in today's trading session, and that is NBCC. Almost 2.5% higher is where the stock is, and they've signed a memorandum of understanding, which is an MOU with MTNL to jointly develop a 13.8 acre land parcel on the Pankha Road in New Delhi. The project, valued at around 1600 crore rupees, will convert the site into a residential and commercial space, and the development aims to leverage NBCC's construction and development experience along with MTNL's strategic asset base to create a modern and dynamic property. This is what the company has said in an exchange filing. The project is expected to offer a mix of high quality residential and commercial facilities, contributing to the growth and modernization of New Delhi's real estate landscape, is what the press release has added. But well, yes, on this MOU that they've gone ahead and signed with MTNL, the stock is holding up smartly. More than 2.5% higher is where the stock is.
Alright, moving on to Brigade Enterprise, that is in focus in the back of two news flows. First up, Brigade Group has announced the launch of its premium flexible and managed workspace solutions called Buzzworks in Hyderabad at the Aura Orbit in the heart of the high-tech city. And this spans over a floor plate of 25,000 square feet. And secondly, Brigade is also expanding its presence in Chennai with another residential project in Velekari, costing nearly 600 crore rupees. Now it plans a high-rise group development at Raptocus Brett and Company Limited facility, which has been closed for many years. Now, Brigade also plans a residential complex of 21,000 square meter consisting of 4 towers, each 18 floors high, with 400 dwelling units. On the back of that, currently it has given up all those gains. In fact, it is trading quite flat right now, slipped into the red, but absolutely flat in trade right now.
Alright, then let's move on. Talk about JSW Steel. Gaurav, you've picked out this stock for us. Tell us what's the news flow here.
As Ankita suggested earlier, steel packs are in focus, and there is not just one reason. Now JSW Steel is there is another reason for JSW Steel to be in focus, and that is the monthly update that has come from the company. So the consolidated crude steel production for the company has reached around 23.16 lakh tons for the month of August, which is an uptick of around 1% on a YY basis. And when we talk about India crude steel, now that production has increased almost by 2% on a YY basis. When we talk about India operations specifically, the capacity utilization for the company has reached around 91%. And at the same time, company has also said that they have commissioned all the major facilities to expand the capacity from 3.5 million tons per annum to 4.5 million tons per annum at BPCL. Other than that, the production ramp up is expected to gradually by Q3 of FY25, and on back of this, we saw a huge spike in JSW Steel holding up in trade today.
All right, moving on then, Snehi, like you mentioned, Granules India is in focus today. It has taken an even sharper knock. In fact, it's trading with cuts of almost 16% actually. But the word coming in from Granules is that they're saying that they're actively addressing the US FDA observations. They're fully committed to resolving issues that have been raised. The quality and compliance are paramount to the company, and they will continue to provide updates in timely manner. But on the back of the news flow, Granules India is taking it on the chin today, trading with cuts of more than 15.5% there.
Absolutely, seems like the street is not taking the word coming in from the management very happily, because it's an optimistic word coming in from the management, but the stock has seen a further knockoff, because when we addressed Granules at the start of the show, it was down about 10%. As of now, almost 16% lower, so it feels like it's a free fall for this stock today. At the lowest point of the trading day, a 105 rupee cut coming in just on an intraday basis on Granules. So that's where the stock is, and yes, we have word coming in from the management that they're actively addressing all of these observations that we spoke about earlier on the show. But on that note, let's shift attention away from Granules and talk about the sugar space. And Sneha, you've picked out Balrampur Chini for us. Are you seeing any more sweet gains for this stock, and what are the levels you're spotting?
If you look at the chart structure of Balrampur Chini, this counter has given a very strong move of late from the month of June, July, and some consolidation or some profit taking was seen, but again this counter is attracting fresh long positions at this point in time. Today it is up nearly 4%. I believe we may see this counter again catching up the rally what we have seen and heading towards 600 plus levels. So I would recommend, if someone wants to go ahead and long, one can think of this counter for the target of 630.
Alright, so that's the view coming in on Balrampur Chini, but let's talk about a stock that's not doing pretty well for itself in today's trade, and that is Nykaa, and that's on the back of a brokerage note coming in from Kotak Securities this morning on Nykaa. Stock is down 2.3%, and this is because Kotak Securities has downgraded the stock to a sell rating from an add rating, also gone ahead and cut the target price by 5 rupees from 195 rupees per share earlier to 190 now. They believe that the quick commerce portals are increasing their assortment of BPC products, and Nykaa's portal remains unmatched from a discovery perspective, though they will need to invest more towards quicker deliveries. So on the back of this, they've trimmed the FY 25-27 EBITDA estimates by 3 to 7% on the lower margins in the BPC and the eB2B segment. They say that the sharp stock price run-up drives a downgrade to sell, so they believe that the stock has run up significantly over the last couple of months, and they've downgraded the stock to a sell rating. So this is a note coming in from Kotak Securities, downgraded the stock as well as cut the target price, and on the back of that, Nykaa is lower by almost 2.3%.
Alright, moving on to another counter. Nazara Tech is what you picked out for us, Gaurav. This one's soaring away. It's almost touching 3% gains intraday. Tell us what is the news flow for this?
Nazara Tech in focus because the company has now announced an investment in Stan, which is a leading gaming community platform in India. Now the company is going to acquire around 16% stake in Get Stan Technologies for 18.4 crore rupees in all cash secondary transaction. Now when we talk about Stan, this is actually building a mobile first platform that fosters connections among gamers and support content creators with tools to succeed. When we talk about the numbers, as of July 2024, Stan has around 12 million users, with around 80% users coming through organic and referred based channel. The platform has also shown monetization, boosting over around 5 lakh playing users and a high 30-day retention rate of around 60%. Now talking about the entire acquisition, Stan's CEO said that Nazara's investment will be a major boost for Stan to fast track the journey to redefine gaming and esports. And when we talk about Nazara Tech also, as you said, this stock is up in trade, almost 2.5% up right now. So definitely watching out on this counter.
Alright, that is Nazara Tech soaring away in trade, trading with gains of over 2.5%. But BPCL is another name that is in focus today. It is because Bharat Petroleum Resources Limited, 100% subsidiary of the company, and its exploration production arm, along with IOCL, is acting jointly through a 50-50 special purpose vehicle. Now, Urja Bharat Private Limited has been awarded a production concession by the Supreme Council for Financial and Economic Affairs of Abu Dhabi. Now, this follows an award of the exploration and production concession to UBPL in March 2019, and the successful completion of the exploration phase, during which the company had invested nearly $164 million. On the back of that, BPCL is in focus today. Right now, it is trading with gains of over 1%.
Okay, so that's BPCL in focus, but let's also shift focus and talk about the QSR space because Sneha, you've picked out Jubilant Foods for us, and if I take a look at what the chart indicates for this stock, last 6 months of 50% uptick coming in for this stock, and you know, last 1 year also the stock is higher by 26%. Now QSR has been in focus lately. What do you think is the direction for the stock going ahead, and what are the levels you're spotting?
If you look at the chart structure, we have seen this counter rebounding precisely from the 89 EMA on the monthly chart. So that was the zone which was around 420. This counter from that zone has been recovering. It's been 7 months now that it has been, in the uptrend. And I believe looking at the chart structure, we may see it heading above current zone even. There was a resistance around 657, 660 zone, which this counter has surpassed today. So I believe we may see an follow-up buying at least towards 700, 720 odd zone. So someone who's already holding this counter may continue to hold, and despite some resistance zone, this counter is not showing any sign of profit booking, which is a very interesting thing. So I believe we may see a smooth rally towards 720, 725 levels.
All right, that's Jubilant Foodworks. But with that, it's time for us to slip into a short break. But quickly before that, I'll mark the Nifty, which has given a good recovery of almost 250 odd points. It is now happily above the 25,200 levels. It's a sharp recovery, in fact, a sharp spike up that has come in the last 10 minutes. It is now trading with gains of almost 292 points, a 250 point recovery from the day's lowest point. So 25,210 is where the Nifty is at. But with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right back.
Hi there, welcome back. Thank you so much for still staying tuned to Market Fatapat. Let's keep it going once again with all the stocks that are in focus. And Sneha, this time you've picked out Titan for us. And it's surprising actually, for the last 3 consecutive days we've been addressing Titan on the charts. You have a whole host of techies that are picking up Titan, and if you take a look at the charts, last 6 months, it's not done anything, very flat. Year to date also the stock is flat. Last 6 months, roughly 3% return. Do you think this momentum is going to pick up now and the stock is going to give better returns going ahead?
If you look at the chart structure, on a weekly chart, this counter has always taken a support near the 89 EMA. This time also, if we see, this counter was consolidating near the 89 EMA, and in last couple of weeks, we have seen a smart, recovery from those zones. And I believe looking at the recent price action, we may see this counter, surpassing the recent highs or like the resistance zone, which is placed around 3,820, 830 odd zone. Once it surpasses that, and we may see some momentum coming in. So one need to keep a close watch on it. And if someone wants to go ahead and long this counter, one can go along with a strict stop loss of around 3,660.
All right, that is Titan for you on the charts. But Gaurav, on the back of research, JBM Auto is soaring away in trade, almost touching 5% gains. Tell us, what is the news flow that's powering this stock?
Well, yes, JBM Autos is in focus, and this is on the back of the cabinet approvals that came in yesterday. The highlight was that PM E-Drive, which came with an approval of around outlay of around 10,900 crore rupees over the next 2 years. And another highlight was that PM E-Bus Seva. Now, under this, they have said that they will be rolling out over 38,000 e-buses with an outlay of over 3,435 crore rupees by FY29. They also say that Made in India e-buses Seva payment security system will be in focus, and with this, they will be supporting the operation of e-buses for the period of up to 12 years. Other than that, the rupees 4,391 crore rupees have also set aside for procurement of around 14,028 e-buses by STUs or public transport agencies. And with this, JBM Autos being one of the players who makes e-buses, definitely this stock is in focus. Right now as we speak, this stock is up in trade at around 4.5% of gains.
Good moves coming in for JBM Auto today. In fact, we also caught up with the management of JBM Auto, because in a bid to amp up India's EV presence, the centre has allocated 10,900 crores under the PM E-Drive scheme, like Gaurav mentioned. So we caught up with the managements of Atul Auto and JBM as well to understand what this move entails for them and the sector going forward. Let's go across and listen in.
We expect that it is going to be beneficial for entire system. I am much excited to see that it is not only benefiting the end user, but it is going to give some allocation for infra as well, in terms of upgrading the testing agency and followed by putting up public chargers. We are all set to roll out with this new scheme. that is definitely going to push or enhance the sellability of the product, as well as it will help us to gain the market share.
It has come at a very opportune time since the sector is taking off. And clearly you see that the 10,900 crores of PM E-Drive will drive it northwards. And we are going to see a huge growth because today we are sitting at about 7% adoption of the auto industry on overall basis from two-wheeler to buses, which I think should be going to more than 15% to 20% in the next 2 to 3 years. And definitely we are targeting 30% plus by 2030. I would say it is not crutches, it's a catalyst. And it is really giving it the kind of growth momentum it needs, because I think EV sector, like in the bus segment, has already hit parity at a TCO level. But we are all very keen that the private market also gets in and multiple other segments are incubated, because in next 2-3 years, multiple other segments will also be hitting parity. So I think that's a transition period which needs support, and that's exactly what the government has addressed in this case.
And well, moving on to the stocks that are in focus, HPCL is another stock that is in focus on the back of two news flows actually. One is that they've informed that they've appointed Mr. K. Vinod as the Chief Financial Officer of the company, and this will be with effect from 11th of September 2024. And also the company has informed the exchanges that the board has approved for the construction of pipeline from Vishak to Raipur analyse facilities, including the depot at Kantabanji at an estimated cost of 2,200 crore rupees. And they have also revised the cost of the VRMP to 30,600 crore rupees with a mechanical completion by October 2024. So those are the news flows that are coming on HPCL. It has given up those morning gains, but nonetheless it is trading in the green with gains of 0.7%.
Okay, so that's HPCL in focus, but let's also talk about Tata Steel that is in focus. This is on the back of an agreement that they've gone ahead and signed with the UK government. Tata Steel has signed a 500 million pound agreement with, it's a euro agreement with the UK government for 1.25 billion pound green steel project in Port Talbot. And on the back of this, we also have a Morgan Stanley note coming in. Let's go across and understand what their view is on Tata Steel. They've maintained an underweight rating with a target price of 135 rupees per share, slightly lower than where the stock is trading as of now at 150. They believe that this is a positive development for the company. However, there is limited clarity on renewed discussions with the UK government, and that has been an overhang for the company. They also await clarity on whether there is any additional financial support for affected employees, and no additional project cost should be viewed as incrementally positive. That's the word coming in from Morgan Stanley on Tata Steel. The stock is almost higher by 2%.
Also talking of Tata Steel, Sneha, the MD and CEO of Tata Steel, TV Narendran, has flagged off concerns for steel and allied sectors from the rising Chinese imports, and he says that the surge could impact the profitability and the company's investment roadmap in the long run. Let's go across and listen into what he had to say about that.
I think this is a real concern. While it's just now more of a concern for steel, it's a concern for all industries, and I think we should be conscious of that. Because if you look at steel, China is exporting more than 100 million tons of steel at prices at which they are losing money. So it's not that Chinese steel industries are competitive and making money at these prices. So the question is, how much do you want to let your industry suffer because the industry is making investments? And if India, which has so much of iron ore, is importing steel, it's an irony that that's happening. So that's why our submission to the government is something needs to be done.
So in the Supreme Court, there was a verdict in terms of mining, royalty, taxation, etc. How has that played out for the industry, and what's your view on that?
Well, it has a huge impact, not just on steel, but all on industries which depend on minerals, whether it is cement, whether it's power, whether it is aluminium, everything else, right? So I think the point is, firstly, what will the state government do with this judgment? What is going to be the demand? It's not that we have a demand from the state government yet. They are looking at all options, because the question is, how much do you want to tax up front, and or do you want to allow the industry to invest and grow and collect the taxes that you generate that way? So I think this is a conversation we're having with the state government on the retrospective part. On the prospective part, we are having a conversation with the government at the center, because obviously the MMDR Act was made with a certain intention in mind, and something like this again negates some of the advantages of MMDR for the industry. So I think the central government is also looking at how to amend the act if required, so that it addresses the issues that the industry is facing.
Just finally, closing thoughts on demand outlook for the steel industry for second half of 2024.
See, the demand is decent. The demand reflects the GDP growth rate. So if the GDP is growing at 6-7%, I expect the demand to be around that level. Second half hopefully will be better than the first half, because first half Q1 we struggled a bit because of the elections, and then monsoon is quarter is always a weak quarter. Second half is a festival quarter, and January to June is typically a good time for the steel industry. So I expect H2 to be better than H1.
Okay, let's keep it going with the Tata group of companies. In fact, Sneha, you've picked out Tata Communications for us. Now, if I take a look at this stock on the chart, last 1 year also has not done much. A roughly 9.5-10% return is what this stock is given. Do you think now would be a good time to enter into this stock, and what levels can we expect to see on the upside?
Overall, the chart is very strong. Though we haven't seen some momentum coming in, we are seeing index, this counter trading in the range of 2080 on the higher side, and on the lower side 1720, 1700 has been acting as a support. So looking at the overall chart structure and recent price action, I believe we may soon see this counter surpassing the resistance zone, which I said that is placed around 2000, 2070, 80 odd zone. So once we see an up move beyond this, we may see some momentum coming in, and we, it looks that we may head at least towards 2200, 250 odd zone. So someone who's keen, or someone who's already holding this counter should continue to hold, and we may see some momentum coming in anytime soon, in fact.
All right, that was the last talk on Market Fatafat. With that, it's a wrap on this edition. Sneha and I will take your leave. Sneha, Gaurav, Ashish, thank you all so much for joining us for this edition. With that, it's a wrap, but you don't go anywhere. Closing trades will take the action forward.